Hello, Maverick traders, and welcome out. This is Ankit from Maverick Currencies, and this is a quick currency preview for the US Payroll's jobs report tomorrow. Again, that's due at about 8:30 AM Eastern Standard Time, and as always, we're going to prepare ourselves for this upcoming report and look at the relative strength and weakness and find out where is the next big opportunity. So as we look at the expectation, again, we had the ADP, the private payrolls report on Wednesday, and that did show weakness. I wouldn't be surprised tomorrow that we actually get a little bit weaker report. We have seen these layoffs that are taking place across the board, and I think this will, again, could lead into this unemployment rate. They're already expecting a tick higher, and they're expecting the employment change to be 193. So I think that we could see an uptick in the rate, and we could see a much lower number for this payroll report. So now, how are we going to position ourselves? So let's take a look at currency basket analysis and see where the velocity score is. So right now, we are definitely getting good score across the board. I mean, take a look at the pound as a -3. Today was definitely a great market condition, and this is again a good news for traders that were waiting for pickup in velocity. Remember, we had things sitting at -1 and +1. Again, not really the environment we want to be in. We want to see when things are at +2, -2, or -3 or +3. So we are seeing pound weak, relative weakness in Aussie and the euro. So these are the three currencies that we're going to focus on. We have the Kiwi and the Swiss franc as a -1. All the cryptocurrencies, again, are consolidating, so we're just going to park them on the sideline here and pay really close attention to the yen, the dollar, and even the CAD. They all had a bit of a better scoring today. And again, our primary focus going to tomorrow is the dollar. And we're going to pair for both the best case scenario for the dollar and the worst case scenario for the dollar. So as always, every time we're trading the news event, there's always the question that we have: when should we enter the trade? Before, on the news, or second stage? And this is, again, all boils down to your bias. If I have a stronger bias, I could start with a half a position size before and enter another one on the news. Then sometimes we can also enter on the news. And again, this is where get the price action and jump on it. Second stage is where we get the price action. We want to let the dust settle and then look for the next trade. Everything has its pros and cons, and that's why trading a news event can be a little challenging, especially if you're changing things around every event, because the only way to get consistency is when you are consistent with your decision making. So going into tomorrow, I personally would like to enter on the news. I might enter or put the stop losses or the markets, the stop for the entry, but I definitely want to kind of get in on the initial move. Again, if we get a whipsaw in the markets, again, that's where we really want to be in the second stage. But I think we can get a decent move tomorrow, especially how the markets are looking so far today. Again, if you're looking to enter or having a buy stop or order before it, just realize that you can be affected by slippage. Yes, you can be affected by slippage even though you have a buy stop order or a sell stop order. So this is one of the reasons why we use a stop limit and a sell limit. So that way we can create a window, so then we know exactly how much of a slippage I'm okay to have. Again, we don't always get a slippage, but again, those are always the case scenarios that we need to be prepared for. So if we want to be entering trades beforehand or setting our stops, then we will be using a stop limit order. Another thing that we always talk about is the whipsaw. Not every news event is a great trading environment. Sometimes you get this whipsaw where it just goes both ways and it just stops you out. It just doesn't go anywhere. That's what we call whipsaw, where we get big shadows on both sides. So again, at one point it looked convincing that it wanted to go lower, and then at one point it looks like it wanted to go higher. So this is again one of the reasons where we talked about what's the best strategy to use. So I always let the trader decide based on your trading plan which one fits the best to you. And like I said, personally, I kind of work based on the biases and risk to reward ratio. And again, there's many times I've entered before, especially if there's just a one-way move that you want to get in before, because sometimes the second stage entry could be a little too late and the trade is done. So we'll be discussing this in tomorrow's live session. We'll be taking a look at this, going through the process, and then talk about the setups. So let's do a quick sort of homework here and see what exactly we were looking for in the trade setups. What actually stands out to the most here. So again, let's talk about dollar here. Impressive move of the dollar, and again, also pay attention to the volatility. Remember, I've been talking about lower volatility for the last few days, and this is a good news for traders who were wanting to see some volatility. So we're seeing a pickup in volatility. The ATR, the RSI is also kind of picking up here. So I do like the fact that we have some of this movements here on the dollar strength. So the question really is this to sell the rally on this dollar, or are there any legs behind it? So a lot of times we've seen in the past, every rally were sold. Every time we see this little pop up, it just it gets sold pretty quickly here. I mean, that's exactly what we're seeing almost for the last 2 to 3 weeks. You can go back and see every rally were a good selling opportunity instead of trying to buy the dips. The question is, where do we go from here? I mean, if you look at the price action after the FOMC yesterday, I mean, we actually have almost reversed the losses from what we've seen yesterday. So this is a good sign, especially when the dollar's rejecting this move to the downside and quickly reversing. Let's go on a daily chart. And on the daily chart, you'll notice that we're still in a downtrend. So I think the dollar is kind of stuck in the middle here. Like I've said before, dollar is not really breaking lower, but it's not really breaking out higher either. So it's kind of in the middle here. I would love to see this get above this moving average here, 13-day moving average. I think once it gets above that, I would love to kind of see this momentum change. Because so far, I mean, if you look at this exponential 13-day moving average, you'll notice that we actually have been below it since late October, November. Again, remember, that's exactly when this whole downtrend started, and we have been kind of low it for the whole time. So for a dollar to really catch some traction, we need to see that momentum change and behavior change as well, where the dips are being bought out. Currently, the dips are not bought out as quickly. I mean, this is the first one that I'm noticing that's really catching it. But so far, I think we want to be taking a look at dollar both case scenarios. I mean, dollar is no longer the biggest short that we have seen for the last 3 months. But I think it's about to have some of this back and forth movement before it can turn around. So right now, momentum is on the stronger side. We're seeing a +2 on the dollar. So we need to pay attention to this, especially if we see a follow through. On the other hand, we have the yen, which actually looks much better compared to the dollar. So, I mean, this is the yen basket. You can see we've kind of broken out and we're making a little high base here. I personally like the price action we're noticing in the yen here. I mean, we are not really getting this negative correlation between dollar and the yen. Right now, they're both kind of performing well. If we take a look at the dollar yen currency cross, and we can see that this thing is right at the support. So this is a good level of support, I would say, between the dollar and the yen, right at about 127, 127.60, 127.70. So right now we are continuing this downtrend, which means that yen looks better. If we get a fake breakout again, where we actually dips lower and then kind of rises back up, I think that we'll have the dollar likely to lead on that. But right now, it looks like it wants to break lower. So we have seen this crazy consolidation for the last few weeks. I think if you're looking for a consolidation break, then dollar yen would be the pair. If you're looking for dollar on the stronger side, I think there's better opportunities to be had, especially as we looked at the relative weakness and strength between these currencies. We have the Australia dollar, US dollar. I mean, this thing is kind of going sideways, had a massive run. I mean, if you take a look at the change from the bottom here, again, in starting January to where it is, it's had a very impressive 5 to 6% run. So I think this kind of puts this at a risk of a bit of a short-term correction. It clearly fails to break out. I mean, we have this double top right here. So if I'm looking for a short, want to be using above this area as our stop, and then see if we can actually break lower. And on the lower end, I would like this to see break below the 69.80. That way it'll confirm that It has failed that breakout. This was the prior resistance. I would love to see that break below it. And remember, this was a strong level of resistance or support if you look back in time. So this 69.80 mark is a crucial mark. So 100 pip away from to the downside, and we are seeing about 80 pip on the upside. So I do like the risk to reward ratio going on a further downside in the Australian dollar, US dollar. Now, let's talk about euro dollar. This is another trade that, I mean, you can see that you're rejecting this little breakout. So if I look back in time, I mean, we are kind of right at the resistance area. So I think this is where, don't love the price action today. I mean, the ECB did raise rates by 50 basis points. But remember, this is the call that we had. It's no longer in that bullish rate hike cycle where every currency is appreciating off this central bank rate hikes. I think we're seeing a rhetoric change where, you know, once they're said and done, everyone is focusing on what's next. And I think right now that the central banks are less hawkish and they're more cautious, more on the sideways to not making any change. So right now, I think I do like euro dollar on a reversal as well. Especially if it breaks this moving average as well, the 13-day. Right now, you can see that it's actually acting as a nice little support here. So I will like this on a further break of that 108.50. You can see that on a weekly chart, it's giving us a nice little wick here. It's not a good sign, especially if you're looking for, you know, a bull run in the euro dollar. I think it's acting as a 110 is acting as a nice level of resistance. So I mean, you can see that the momentum is almost getting in this overbought level. And again, look at this weekly charts. I think that's where I'm noticing a lot more clarity on where the next big move is going to be. And I think we can see a bit of a turnaround as the RSI started moving lower. Same thing kind of goes with pound dollar, a massive move today. I mean, look at the double top right here on the daily chart. I like the fact that we have this short-term resistance at about 124.15. And this is already breaking below this. So I do like the pound dollar to the short side. So again, I think this is the report where I would like to take a look at the long dollar positions tomorrow more than the short dollar positions. If I have to go short the dollar, I think the dollar yen, and I'm actually paying very close attention to this 127.28 area. I think this is a very important level of support. But on the other hand, definitely there's more reasons to be looking at the similar setups. Look at the Aussie yen breaking lower. I think it's a matter of just finding the right currency to be moving. So I'm not looking to jump anything overnight, but I think something we need to pay attention to in the next 24 hours. And we'll be doing this analysis again tomorrow and see what exactly is holding overnight. And based on that, we'll pick those currency pairs. So again, dollar and yen is strong going into tomorrow's report, and euro, pound, and Aussie showing weakness. So pay attention to these pairs. I do like how things kind of unfolded today. And if there's a job supportive week of tomorrow, I think markets can kind of take a little dip lower, especially how impressive run that we have seen in the markets today. So that's the game plan. We'll see you guys early tomorrow morning. If you haven't registered, so make sure you go register from the website, and we'll see you early tomorrow morning. And hopefully we can catch some good opportunity off that report. Thanks, everyone. Have a good night. Cheers.